it's the perfect storm. This is the time. And like I said, for those who've gotten to know me for the last 18 years that I've been in this industry, I've never made these types of claims. I've said, listen, I've been very, very, very conservative, but, and I say this when there's a strong likelihood we are going to see lower prices. You know, I'm not saying this is the bottom, but you're never going to time the low. And this is as good as an opportunity as I see. And so this is a moment where I'm all in.
Today's guest is a supporting sponsor of Liberty in Finance.
Welcome back to Liberty in Finance. We're glad to have this returning guest. Shawn Khunkhun is the CEO and director of Dolly Varden Silver, and he's here with us this Thursday, September 8th, 2022. Shawn, thanks for coming back on Liberty in Finance.
Dunnigan, thank you so much for having me.
It was terrific to meet you in person at the Rural Symposium on Natural Resource Investing a month ago in Boca Raton, Florida, and your staff as well. And to be there over a period of several days, getting to introduce the family, getting to hear more about your company and so on, and frankly about the whole industry in general. It was just a very positive experience for us. I don't know if you had any quick takeaways for people of your experience from that conference.
Yeah, first of all, it was really nice for me to see your children and your grandchildren, and you have a beautiful family. And I think, you know, that's why we're all here. That's why we're all doing this. And so, no, you know what? It's interesting. I attended two conferences recently. So I went down to Boca Raton and I spent some time in the greater Miami area. And then more recently, I was in Spokane, Coeur d'Alene at the Silver Symposium. And, you know, my one comment about the greater Miami area, it's really interesting, Florida at large. I feel like as a Canadian coming down to Florida, Florida has now become like the melting pot of the U.S. from my perspective. You know, and I think it's, you know, we can tip our hat to the governor there for some of his policies. And I think it's, you know, whether it's because of the work at home or remote work or whatever trend we want to peg this to, I think, you know, Florida has become such a tremendous hub, not only for finance, for freedom, but also from a cultural perspective. And then if I go back to my experience recently in Coeur d'Alene, Spokane at the Silver Symposium, what a difference! What a two tales of two different Americas. And you know, there's a juxtaposition from the beauty of the landscape in the area to some of the dire strait of, I think, what's hit the American heartland in terms of some of the challenges of inflation, of some of the stresses that we're under, you know, as citizens here. And it was really interesting to see these two very, very different, you know, if you look at just real estate values, for instance, and you look at what's happening in Florida versus what's happening in Western Washington or Idaho. And yeah, it was really interesting to see those two very different sides of the country.
Ironically, they are both target areas for people wanting to relocate from states that have become overbearing and overreaching, restrictive on people's freedoms. And over the past 2 years or so, there's been quite a migration of folks both to the Coeur d'Alene, Idaho greater area around that, as well as Florida. So it tends to be maybe a lot more New York, New Jersey folks that are moving down to Florida, maybe California, people moving up more to Idaho and Montana and Western Washington. But it is interesting to see the readjusting of people trying to find where they can find liberty and freedom and a potentially a better life. And there is a love of the natural resources in both those places as well. They both are places that are rich in water resources, which is a big deal, it seems, in the coming era. As we know, there's a big shortage of water for the past several years, and as far as we can tell, for the next several years and beyond in the southwestern United States. That portion is under some really severe strains in those areas. So it'll be interesting to see how that happens. But you've been in those places. One of the things that wanted to talk with you about is the general state of the silver market, the silver industry. Frankly, it's been perplexing to many how it is that a metal such as silver that is so versatile is used and needed in so many industries, and as well as having monetary and financial demand, investment demand as well, continues to lag behind even nominal prices of silver, and silver mining companies and so on are laboring in the face of inflation. As the dollar's worth less and less, and taking more and more dollars to buy anything, food, energy, education, medical, go on down the list. All the aspects of the cost of living are going up and up, and yet the price of silver, the nominal price of silver, and the price of a lot of the mining companies, exploration companies, etc., continue to lag behind what I guess Rick Rule keeps telling us. If you have an eye for value, that spells opportunity. If you see something, there's a big discrepancy between its price and its value. Can you give us your view of that big picture of, I guess, silver supply and demand, silver pricing, and then how that's impacting the mining companies?
Sure. I think something else Rick Rule talks about is how the stock market in the short term can be like a voting machine or popularity contest. And in the long run, it's more like a scale. And so for me, if I think back, whether it was March of 2020 or the fourth quarter of 2008, at times where you get these gyrations, these volatilities, these changes, we see weakness in prices, like including the metals. And I try to look beyond that. And I try to think about where we're going to be in 3 months and 6 months. And so I try to be a contrarian in these moments. And when I was down in Spokane, it was the first time since March of 2020 where I got some more physical metal. And so, listen, I was with a very, very successful resource investor who's got 40 years of experience. I've got about 20 myself. And he said to me, Shawn, he had to go back to the period between 1996 and 2001 for the last time he saw the types of opportunities there are right now in not only the metals themselves, but more importantly, the companies, the mining stocks, the junior resource mining equities. We haven't seen valuations this low ever with respect to relative to commodity prices. So I think this is just one of these moments where everything's being thrown out. I saw a company the other week where they had secured a financing at a 23% premium to market, okay, from a very major producer, a very significant material amount of money, and the stock is trading at 20% below that price. In a normal environment, the market would trade at a 30 to 50% premium to that price. And so all I can say is this is a moment, if you have the means or if you're not invested in the space, this is the moment. And for those who've followed me for years, I usually take a much more conservative approach. But this is one of these moments where if you look at what insiders are doing, insiders are buying, experts are buying, and things could get cheaper. We could see more value. We are in very uncertain times. We've got a war raging. We've got inflation. We're coming off a decade-long run in asset prices. So things could get deeper and deeper and deeper discounts, but it's a short-term disconnect between the fundamentals that are driving industrial demand, continued monetary demand, and also less supply. So the fundamentals are spectacular, but this is a time where just take advantage of the sale.
The ironic aspect of this is we keep hearing from the most experienced and most successful long-term investors, such as Rick Rule. He has the saying, you'll either become a contrarian or become a victim. And yet it is so common for ordinary people who are just getting started or trying to make sure that they make the right step at the right time in investing to look at a very short-term horizon, a few weeks or a month or something, to decide, gee, did I do the right thing, or are things going the wrong way? And as you mentioned, if they take advantage of a value opportunity that's presenting itself right now, and perhaps the markets cave even farther in the next quarter or so, or 2 quarters, and rather than kicking themselves, people who really understand with a real eye to intrinsic value, like Rick Rule, say they just get more excited when they already own something that was they deemed to be a good value when they purchased it, and that goes further on sale. They just get excited and try to see what they can do to acquire more of that, because it's even a more compelling value proposition. The flip side risk is if people try to wait and time till they say this must be the ultimate, to do that bottom picking, it can be very frustrating and difficult. I know David Morgan, among others, who's known as a silver guru that we have on our channel as a guest, often says that that's a fool's errand, is to try to do bottom picking and top picking rather than to find value where it can be found and take advantage of mispricing where it's evident. And it sounds like that's what you're saying. This is the moment that we are being presented with that kind of an opportunity at this time.
And what I want to add to that is, if you go back 20 years, okay, if you go back to the end of the 1990s, and you look at where the gold price was and where the silver price was, and if you look at, I have reasons that I believe the price of gold had been underperforming. One of the major reasons, in my opinion, was you had central banks were sellers of gold. Okay, they were net sellers of metal. And one of the reasons that attracted me to gold as an investment in the early 2000s was this belief that as central banks went from net buyers, from being net sellers, that was going to be very bullish for the price of gold. So I had one element that made me want to get long precious metals. Now, there's a second element, which when the price was low, there was underinvestment in the sector from mine supply. So companies were not putting money into development or exploration. So that further exacerbates the whole fundamentals for gold price moving higher. Now, what we've seen since is we've seen things like quantitative easing. We've seen this massive expansion of the monetary base. So these are all further elements to support this rise of the metal prices, and why, and now if we go through some of the policies that have come through, and it's not just in the United States or in Canada, it's global. Every central bank is doing it. And so I just think that I have so much more conviction, and working with mining companies, working in the industry, working with developers, producers, explorers, the one common theme that I've seen is a decrease in average grade. Okay, so we're having to go further and further and deeper, and we're getting lower grade projects with higher capital expenditures to get this stuff out of the ground. There is less of an appetite from a lot of the world for this stuff to be mined. So the not in my backyard mentality and so it is, essentially now as a miner, as an explorer, as a developer, I've got to focus my efforts now into brownfields opportunities, mature camps, where the community, because there's been 100 years of history of mining. So it's my point to you, Dunnigan, is it's the perfect storm. This is the time. And like I said, for those who've gotten to know me for the last 18 years that I've been in this industry, I've never made these types of claims. I've said, listen, I've been very, very, very conservative, but I say this when there's a strong likelihood we are going to see lower prices. I'm not saying this is the bottom, but you're never going to time the low. And this is as good as an opportunity as I see. And so this is a moment where I'm all in.
And, one of the things you mentioned was grade. Grade has been a challenge. And in the face of rising energy costs, rising parts costs, rising repair costs, rising labor costs, as Rick Rule would say, rising jurisdictional costs, if it's from taxation and everything else, in the face of all those rising costs, if you've got the average grade that most producers are digging out of the ground has been dropping and dropping over a period of time due to not investing in exploration and development, that sort of thing, for whatever reasons, or just Dolly Varden, your company, is a standout in that because it has a different story and a different focus. It does not focus on low grade, but on high grade. So could you make clear to everyone, including myself, the distinction why Dolly Varden stands out because of their focus on high grade and high potential prospects?
So the first thing I want to say is, for anybody who's new to Dolly Varden has a really rich history. And I took over the company about 2.5 years ago. And since taking over, we've seen the value of our share price. We're up about 80% at a time where our peers are flat. Okay. And in the last 12 months, we've outperformed our peers. And this is, when I talk about our peers, I'm talking best in class companies. We're outperforming our peers by about 20%. I've taken all the knowledge I've gained over the last 18 years, and I've put it into this opportunity. I was deliberate in finding an opportunity in a safe mining jurisdiction with a high-grade deposit that's got room for expansion. And so I believe in the mining industry, grade is king. So we're going to have one of the lower cost projects moving forward. And at the end of the day, the larger mining companies, they're depleting mineral inventory every day. So what we're hoping to achieve is we want to be the pipeline development project for the major to advance. And we're doing it in a safe, well-established mining jurisdiction. We've got a large project. We've got some tremendous backers. So Hecla Mining, Eric Sprott, and other large institutions are some of our shareholders that have come in and validated what we're doing. And listen, we're having success. We just announced a few weeks ago that we stepped away from our known resources and we made a very substantial discovery. So we hit 50 meters of over 400 grams of silver. This is a tremendous discovery. It's going to add to our mineral inventory. And I just announced the other day that we're getting more aggressive. A lot of companies are cutting back. A lot of companies are decreasing their programs. We're seeing such encouraging results that we've added a 4th drill rig to site, and I'm expecting more results imminently. And we've been very encouraged with what we're seeing visually, and also the results that we've reported. So I think this is just done again twice in my 20-year career. I've had the good fortune through hard work to be on a project that had momentum. And this is just one of those times where things are working. And even when we have adversity, we're finding ways through it. And we've been delivering great results. And I really believe that this is a project that will be advanced, maybe not by Dolly Varden, but I think our shareholders are going to benefit from what the company's doing today.
One of the things I wanted to mention for the benefit of all of our viewers is that the company was one of the very few that was selected to be exhibitors at the Rule Symposium on Natural Resource Investing because you've already been through so much vetting and examination of from your financial results to management team and track record and everything by Rick Rule himself and by Sprott, that they own that your company in shares in their own accounts, and therefore they know that they can't promise anyone future performance, but they can promise people that they've vetted the company and checked out. So that's a big deal to us and to our viewers, is to know who can you trust. And Rick Rule has earned the trust of our viewers in terms of being a reliable, sage sounding board for analysis of companies, analysis of their value proposition, And the fact that he has his stamp of endorsement on Dolly Varden means a lot to us as well. So really grateful for you sharing, the update from the trenches there on what you're seeing now, the promising signs that are continuing to develop, and why you believe that this is a moment of special opportunity. And I guess before we wrap, just want to make sure that people are very clear on how they can get more information about Dolly Varden and educate themselves so they can become prospective investors.
Sure. So we've got a website, dollyvardensilver.com. We love talking to shareholders, so we've got a toll-free number, 800-321-8564. And for those who are active on Twitter, we post company developments, pictures from the field, and updates regularly at Silver Varden. So, and again, we love the industry. We're active in the industry. And so whether investors want to talk about Dolly specifically, or they just want to talk about our take on other opportunities or trends, we're passionate, and I work with a tremendous team of scientists that have just made a career of bringing value to their investors. So Dunnigan, I just want to say on behalf of Dolly Varden, we're grateful for the opportunity to come on and talk to you and to be put in front of your viewers. And I hope to be back on after we report some more results, because I really feel like this project is in its early days. There's tremendous prospectivity here, and I suspect that in the coming weeks we'll be delivering more results.
That'll be great. And so just to recap, the contact info you just enumerated will be in the description of this video. So folks, if you want to make sure you get it right, just look in the description of this video. You'll find out how to get a hold of Dolly Varden. We'll also put a copy in there of your recent press release you just came out with this week about adding your additional drill capacity, so people can have a chance to look at that as well. And as always, Shawn, just thank you for joining us here again on Liberty and Finance and for supporting our mission here. We believe it's a win-win all around. You're benefiting from getting your message out. We're benefiting from being able to reach out to our viewers who are benefiting from finding out about these opportunities that have been truly vetted by some of the best and the brightest out there, that they are trustworthy and great opportunities at this time when it seems like so many things are going so difficult in our lives, that it's nice to find out something that's going well, something we can participate in, and for the benefit of our family and our future. And just grateful for your presence here with us on Liberty and Finance.
I want to leave you with just one final thought. It's important for us to support each other. When I was at this conference in Spokane, Washington, there were about 300 people in attendance. And I remember thinking to myself, if this was a Bitcoin conference, there would be 3,000 people. And if this was a Bitcoin conference a year ago, there might be 30,000 people. My point is, this is a time for investors. You have a moment here where there's very few of us, and there will come a moment in the future where there's many. And at that time, the valuations won't be here. This is the time to get introduced and to listen to the Rick rules and to listen to the Dunnigans and get familiar with these opportunities and do your due diligence, because I'm speaking from experience here. This is an exceptionally good opportunity to get to know the sector and start off with getting some precious metals and go from there.
Well, thanks, Shawn, for joining us and for that word of wisdom, because we say the same thing in the bullion. Availability is less than 1/2% of people have that as any part of their financial picture at all. When that is no longer the case, it will be very difficult, and it will not be at the prices it's at today. So anyway, just thanks again for joining us, Shawn.
Thank you so much for having me. Thank you.